Well, hi guys, welcome back to this Money Control live stream. It's a Saturday morning and we are of course working today given the fact that we had a special live trading session conducted by the NSC and the BSC on the back of a shift to the to the disaster recovery site. Of course, it has been a good start. We managed to hit a fresh high today. 22,420, that's the kind of record levels that we touched today. But of course, we turned sideways after hitting that level. Of course, I am Nandita Khemka and I'll be joined by a guest as well. And we'll be talking about how things are looking like for the markets, whether or not the outperformance by the benchmarks is going to continue here on or not, because the Nifty has managed to outperform the mid-cap index for over the last 1 month, because the trend was largely in favor of mid-caps, right? Because they were that end of the markets were outperforming the benchmarks, if you look at the last 1 year. But that trend has seen some bit of reversal over the last 1 month or so. Pertaining to today's market action, we've turned sideways after hitting a fresh high. In fact, 22,400 is where we are at right now, around that level. The breadth has been tilted in favor of the gainers as well. 1:1, that was the NSE advanced decline ratio, so fairly strong. If you look at the volume picture, marked by low volumes as per expectations, all the sectors trading in the green. Of course, the outperformance once again coming in from the metals pack. If you look at the individual movers on the Nifty, Tata Steel, Adani Ports, Moto after the Feb auto sales data, Tata Motors, Dr Reddy's after yesterday's 4% cut, managed to rebound in today's session. On the losing end, you have PV makers not doing all that well today. So M&M and Maruti among the top losers on the Nifty, NTPC, Grasim. Private banks saw a very good comeback yesterday, but that seems to have fizzled out because the likes of ICICI Bank, Kotak Bank, Axis Bank, all of them are trading in the red today, and so is Sun Pharma. But before moving any further, let me bring on board a guest for today. Joining me is Kranthi Bathini, who is the equity strategist at WealthMills Securities. Great to have you on the show, Kranthi. First of all, let me get in your thoughts on the kind of rally that we saw that we have seen in the markets over the last couple of days. Right, we've broken out of a range. We were stuck in that 22,200 to 22,300, somewhere between that zone. But we've come out of that in a very strong way. Of course, much of these gains have been fueled by the very strong GDP data that came in. But here on, it's an election year. As we step into, or as we move closer to election, do you expect this pre-election rally, so to say, gather steam, or do you think there could be a correction in the offing?
Nandita, hi. Good afternoon. Yeah. Coming to the markets are in a consolidation phase, but the GDP data really surprised the market, and that given a kickstarter to the markets to break that higher range. So currently we are at the 22,400 range. Market need to gather some more momentum in terms of the positive news flows are concerned. Of course, GDP data really helps the market to sustain at this level. But inching from this level to the higher range, the higher end of the market, it needs some more fuel. But what we can sense at this point of time, Nandita, at the higher range of the markets are looking tired and exhausted at the higher range. At the same point of time, we are not expecting any kind of deeper corrections in the market because of the kind of strong liquidity flows and the money that has been waiting on the sidelines. So we can't rule out any sharp corrections also. But any kind of deep declines that market is giving, that's a wonderful opportunity for the investors to accumulate chips in India on a medium to longer term basis. Overall, what we can expect at this point of time in the near to medium term is a consolidation in the market, but the more of the action is stock specific, sector specific going ahead. We can expect a consolidation at the indices level in the medium to short term.
All right, expect consolidation on the indices level. But what about the broader end of the markets? Would the valuations out there worry you, given the fact that the Nifty mid-cap index over the last 1 year has outperformed by leaps and bounds, right? When you look at when you compare it with the benchmark indices. Of course, we've had the SEBI advisory also pointing out the fact that there is a lot of euphoria in the broader end of the markets, and the valuations may be turning frothy out there. So, would you expect the correction to be deeper, any kind of correction to be deeper when it comes to the broader end of the markets?
Nandita, valuations is one of the key concern always. When the market was at 18,000 levels, Nifty valuation is one of the key concern at the higher end. Also, the key concern is valuations. So, Indian markets, given the kind of the growth momentum we carry, so always come and say valuation at a premium side. Coming to your point, the froth at different pockets of the mid and small cap, definitely there are some pockets, there are some stocks where the froth is emerged. So, and the regulators also expressed their concern and given the advisory to the markets. But going ahead from here, any kind of correction can expect in the markets. Of course, the mid and small cap always carries a high beta in nature, but there are some pockets. It should be, we can't paint all these mid and small cap with the same kind of brush. There are some pockets where the froth has been we are witnessing. But coming to the point, it by and large more stock specific, Nandita, going ahead, and one need to look into their individual portfolios. What are the stocks they're carrying? What are the stocks which have the higher valuations? How the earning outlook of these companies and the future cash flows of these companies, that is extremely crucial. And Nandita, in this market, what we are witnessing is the higher PE multiple stocks remain higher PE, at a higher PE, and their PE multiple has been going up. If in those cases, if the earning outlook of the companies is not good, that's where the froth is there. But remaining, if the earning flow and outlook is good, that's where investors need to take a decision. And wherever the earning multiples are high, and if the investors are sitting on a humongous profit, multi-bagger kind of profit, better to take capital from the table in those pockets. So right now, one need to be very stock specific in these markets, Neha. Nandita,
one should look at when you talk about stock picking, because PSUs for one have run up quite a bit. They've also seen bouts of correction, but even despite the correction, do you think it's prudent to look at some of the PSU names, because some of them have also disappointed in terms of earnings, right? So your thoughts on PSUs, as well as where should one look at, which pocket should one look at right now if you're talking about stock picking?
Nandita, coming to PSUs, it's a whole list of stocks. One is banking, they have mid cap and large cap space. There's a whole list of stocks. So when we say PSU stocks, what we witnessed is in the year 2023, the PSU stocks have outperformed, and also in the past 6 to 7 months, we have witnessed PSU banking stocks, PSU, many of the stocks have multiplied. Even in fact, the railway stocks in PSU segments have multiplied. Coming to the point where the froth is there, definitely there are some areas, there are some stocks which have multiplied without any earning support. That's where the investors need to be a little bit cautious. Coming to the pockets like defense, railways, these are the companies, these are the segments where the earning outlook is quite strong, and the visibility of these earnings also quite strong. That's where investors can stay on. Coming to the point, there are certain pockets where the market capitalization have touched more than a lakh of crores also, without any strong earnings flows. That's where the froth is there. It should be very much stock specific in nature. Coming to the PSU stocks are concerned, Nandita.
What about OMCs? We've discussed PSUs, but OMCs within the PSU basket, the street is fairly divided. Some brokerages believe that, there could be further upside from here. Some of them believe that, they've run up far ahead of, what the earnings picture really looks like. What are your own thoughts? Do you think within the PSU basket, OMCs are poised to head higher from here, or do you think, much of the run is already happened and much of the good news is already in the price?
Yeah, Nandita, PSUs have witnessed a strong rally. And coming to the point at this point of time, whether to book profit from some table at PSUs, OMCs at this point of time, given the kind of the oil outlook is concerned, PSUs are PSU oil marketing companies. They are at a well positioned at this point of time. But as we are entering into the election month, if there is any cut of fuel prices, that's going to have some kind of margin pressure on OMCs in the medium to short term. But given the kind of the long-term outlook of these companies are concerned, we continue to hold on certain uh, uh, oil marketing companies in our portfolio, given the kind of their strong earnings and also the dividend they exhibit for the investors. So on a medium to longer term basis, we continue to hold on to the OMCs. But the overhang with respect to the OMCs is given the kind of rally in the short term and also any kind of fuel price cut that can create margin pressure in the medium to short term, Nandita. That's the
All
reason
right,
one needs to act.
Kranthi, I'll just come back to you in a bit. We've had the closing tick as well. The markets have shut shop for the day. And, if you look at the screens, we've hit a fresh 52-week. In fact, we have hit a fresh all-time high on the index of 22,400 or thereabouts. But, cooled off from the day's high. And, just about in a range-bound session marked by, low volumes, we've managed to end somewhere around the 22,376 mark. The broader end of the markets are in fine fettle. Both the mid and small cap indices have ended the day with gains. The bank Nifty, which was looking iffy during the session, has just about managed to end in the green. The advanced decline ratio even 1:1. And if you look at the sectoral movers, most of them have ended the day in the green, especially the metal pack. Second day on the trot, the metals pack has seen very good outperformance coming in. Yesterday, the index was up 3.5%. Today, as well, up 1%. And also you have Tata Steel once again emerging as the top Nifty gainer. Let's take a look at some of the other sectors that have done well. Autos, I want to see how the auto pack really ended. I think yesterday also it was gaining in excess of 1% or thereabouts, but today just about some bit of cool off coming in, 0.2% lower. That's where the auto index is at. Let's take a look at some of the Nifty gainers on that note. Tata Steel, as I mentioned, Hero Moto on the back of good February sales data among the top Nifty gainers. Tata Motors, Adani Ports, JSW Steel, Hindalco, so all these metal names for a second day on the trot have clocked in very solid gains. Divi's Lab, Cipla and Dr Reddy's managed to snap out of its losses that it clocked yesterday. Asian Paints also snapped out of its recent string of losses. You have SBI, ITC, L&T extending gains from yesterday. On the flip side, what didn't do all that well today is NTPC, Maruti, Ultratech Cement, Grasim, Powergrid, Britannia, Nestle, some of the FMCG names also featuring on the list of losers, and of course private banking names like Axis, Kotak, ICICI Bank, all of them have cooled off, and Reliance Industries as well. Yesterday it was one of the top contributors to Nifty's gains. Today just ended largely flat with a negative bias, but no big cuts coming in there. So all in all, good session marked by low volumes and lesser volatility, of course. And 22,400, that is the level that we have clocked. So Saturday special turning out to be pretty good for the markets, and of course now we can start off with our weekend that the markets have shut and 2-hour trading session has come to an end. But Kranthi, let me get in your thoughts on the metals pack. What exactly is happening there? In the last two sessions, very solid gains coming in. If you look at the likes of Tata Steel, JSW Steel, even Hindalco for that matter. Of course, there was the concerns about its Bay Minute project. Then there was, the whole Novelis IPO and how they filed for it, of course, and how they're going to use the funds. That is the one question that the street is really wanting answers for. So within the metal basket, what is it that you're liking right now, and what exactly is happening? Do you think it's sector rotation at play and underperformers are being bought into?
Yeah, Nandita, as the markets are at a higher end, so the relative valuations of metal stocks have looks attractive at this point of time, and also given the kind of the growth momentum what we are witnessing, and the capex cycle is on, infra spending has been going up, and the companies has been increasing their capacities. That's where the metal demand is coming back. As we all aware, metals are cyclical in nature, so the metals are entering into attractive levels in a relative valuations, and also the outlook for the infrastructure is quite strong. and also the housing sector is doing well. So the domestic metal facing stocks have a strong earning outlook going on a medium to longer term basis. That's where the relative valuations and buying interest has been emerging in metal stocks. Our favorites remains to be Tata Steel and JSW on a medium to longer term basis.
All right, Tata Steel and JSW Steel looking attractive from a medium term perspective. But what about defensives? I want to get your thoughts on the Pharma pack, particularly Dr. Reddy's. It is facing a lawsuit in the US, right? That news came in yesterday and we saw the stock reaction as well. But, Revlimid, do you think, it will get earnings support from Revlimid, which could emerge as a big opportunity for some of these drug makers, even though there is some hiccups, coming in terms of lawsuits in the US. But do you think that's just a near-term hiccup and Revlimid will contribute to earnings, and here on one should look at the pharma space as an investment?
Nandita, we are quite neutral with respect to pharma as a sector in a medium to short-term perspective. One thing what's playing with respect to the pharma is the relative valuations looks attractive for pharma. It should be more stock specific at this point of time. Right now, if you see, just to discuss with pharma, the earning outlook remains neutral in the medium to short term. Pockets like Workout Pharma have given 100% return in past 7-8 months. So those kind of pockets where investors have a high risk appetite, one can play. Otherwise, we are quite neutral with respect to pharma is concerned.
And hospitals in particular, because of course we've seen hospital stocks take a beating after the Supreme Court directive that standard rates should be charged at both public and private hospitals. Could that emerge as a near-term overhang, or do you think of course buy on dips should be the strategy when it comes to some of these hospital names?
Definitely, it's buy on dips. It should be stock specific. The favorites remains to be Apollo Hospital, but it is in the valuations are not that much cheap with respect to Apollo is concerned. Rainbow also, they have a different business model. They have been increasing their spread to pan-India presence. Any dip in these stocks one can add for a longer term basis, not immediately for a shorter term basis with respect to hospital stocks are concerned. The healthcare stocks are concerned.
But I don't know if you track InfoEdge. Of course, the stock is making headlines given the fact that Google has delisted 5 of its apps. Naukri Recruiter, 99 acres among others from the Play Store, right? Of course, the company has said that it is reviewing and evaluating the course of action and working with Google to ensure that the apps are back on the Play Store, right? But how big a negative is this? Because of course, looks like it is going to continue. The issue is going to continue for some time. So in that sense, what should one do with InfoEdge?
The stock has been in a consolidation phase, Nandita, in a medium to short-term basis are concerned. The fundamentals are quite strong with respect to the portal business and the digitalization business is concerned in India. Of course, given the kind of negative news that has popped in recently, that's going to have a negligible impact in the medium to short term. I don't think so. The problem they're going to solve immediately on a fortnight basis. But the earning impact we need to see. But the one can hold on to the stock given the kind of the digitalization business and incubating businesses they have. One can hold on. But given the kind of overhang on the technology stocks and the valuation comparison, the stock has been in a consolidation phase in a medium to short term basis. One can hold on to the stock given the kind of strong business fundamentals they have.
What about Paytm? The Paytm's cup of woes has been overflowing off late, but with the kind of action that the board is taking and the fact that the stock also has seen very volatile price action, right? For a couple of sessions, or in fact for a prolonged period, the stock was locked in a lower circuit. Then it managed to stage a rebound. In the wake of the recent news flow that the Financial Intelligence Unit has imposed a penalty on Paytm Payment Bank for facilitating online gambling. Now, this is a fresh negative setback, right? So, in the wake of all the news flow, how would you approach a Paytm now?
Nandita, if these are the stocks which are suitable for the high risk appetite traders and investors. the company has been going through a rough weather. They're trying to overcome these problems, and the stock has been very erratic. Sometimes it's hitting upper circuits at the lower end, and again at 430, 440 levels. Again, some kind of negative news has been hammering the stock on a downside basis. So at this valuations, they have a strong brand. Digitalization business is quite strong, but given the kind of the current regulatory overhangs on this company is going to create pressure on the medium to short term. But how they are going to weather without any Paytm payment bank, and with how they are going to manage the operations with the nodal banks, that's the crucial thing which one need to take into consideration. Given the kind of the current valuation with respect to Paytm is concerned, only these kind of stocks are suitable for the high risk appetite investors and traders. The low risk appetite and risk averse investors can avoid this stock in the medium to short term.
All right. Of course, higher risk appetite investors, they are the ones who would be keeping Paytm on their radar. But lastly, what are the sectors that are looking interesting to you as we head into the general elections? Of course, we had the GDP data which indicated that the growth or the heavy lifting has been done by the investment side and not the consumption side, right? So in light of that, what would you really prefer right now? Industrials or consumption?
Yeah, coming to industrials, we are quite positive, Nandita, and given the kind of outlook in defense, and also new themes have been emerging right now with respect to the aviation space is concerned. That's giving another opportunity for the investors. And infra is one of our key themes at this point of time. The stocks are relative valuations looks compelling at this point of time. And given the kind of the GDP outlook and the earnings outlook for these companies, this space also looks very interesting for the investors in a medium to longer term basis. So overall, any dip in these stocks like defense, aviation, and infrastructure and engineering as a space gives a strong earning outlook for the investors, Nandita, in a medium to longer term basis.
All right, that's the view then. But with that, we've come to the end of this edition of Closing Bell. So thanks a lot, Kranthi, for taking out time and joining in this afternoon and sharing your thoughts with us.
Thanks, Nandita. Always my pleasure to share my views with you.
Thank you. Well, with that, of course, the weekend starts finally. Of course, it's been a long week and a good week at that, given the fact that we have smashed records when it comes to the benchmark indices, 22,400 already on the charts, and we could look at levels of 22,500 as we step into a truncated week, given the fact that next Friday is a holiday, so we could take some respite from there. But with that, thanks a lot for tuning in this afternoon. But you stay tuned to Money Control for all your other news and updates. It's a goodbye from me. Have a great weekend.